The accounting equation. Why the accounting equation is important in business. Sometimes called the basic accounting equation, the accounting equation is the foundation of double entry accounting, which is a system where every financial transaction is entered into two places in a business's books, as a debit and as a credit. The accounting equation aids management by ensuring that the whole process is being done in an effective and efficient manner. The equation is important at all levels of management, as entry-level managers are now being asked to treat projects like small businesses and therefore take responsibility for the cost of their projects. And they're responsible for functions that are traditionally have been managed by other departments. The equation measures the resources of a business, what the business owns and has control of, and the claims to those resources, what the business owes to creditors and to the owners. One of the extremely important benefits of the accounting equation is that it helps to ascertain the success or failure of a business. The accounting equation is often referred to as a balancing act. It's a simple equation. Assets equals liabilities plus owners or stockholders' equity. It measures what a business owns and the claims on those resources by creditors and owners. The equation has three parts: assets, liabilities, and equity. And it shows the relationship of all these parts. The equation must always stay in balance. Let's take a look at an example. If your business's assets total $200,000, the sum of its liability plus owner's equity should also be $200,000. If not, something is wrong with the math or has been entered incorrectly. Assets are everything your business owns. Examples of assets include tangible assets such as cash, receivables, inventory, equipment, vehicles, and real estate, and intangible assets such as intellectual property like patents, copyrights, and trademarks. Liabilities are payments that your company has to make. Example of liabilities include loan payments, lease payments, payments on lines of credit or credit cards, and other payables. There are two types of liabilities: the short-term or current liabilities are due within 12 months, and long-term liabilities are due to be paid off more than 12 months after the current date. Equity is referred to as owner's equity or stockholders' equities. Refers to how much of the business belongs to you, or if your business issues stock, to the stockholders. It's also expressed as assets minus liabilities and is not to be confused with the value of the business. Let's take a look at a couple of examples of how the equation balances. If a business borrows $35,000 from a bank, assets will increase by $35,000. However, liability also increases by $35,000 because the loan has to be paid back. If a business has finance invoices worth $1,500, assets will increase by $1,500 and liabilities increase by $1,500. If business makes a sale of $10,000, its assets increase by $10,000 and the owner's equity increases by $10,000. If a business purchases equipment for $6,000, liabilities will increase by $6,000 and owner's equity decreases by $6,000. Each financial transaction that your business enters into must be recorded into two of the three categories: assets, liabilities, and owner's equities. When you follow double entry accounting correctly, both sides of the accounting equation are always balanced. take a quick minute to talk about ethics in accounting. One of the key traits of management professionals is adherence to a rigorous set of ethical guidelines. When someone veers too far away from the ethical standards, a manager's judgment and trustworthiness can come into question. Ethical considerations are made in accounting, just like any other department. Accounting deals with intimate financial details that can affect many individuals and organizations. Investors and creditors need relevant and faithfully representative information about a company that they are investing in or lending money to. The accounting equation is at the core of these representations. Proverbs 11:1 says, "A false balance is an abomination to the Lord, but a just weight is in his delight." We're reminded here in the Bible about how misrepresentation is sinful. Cheating had become common in the time of Solomon as the commerce of Israel began to develop. Proverbs 11:1 was there for good reason, giving warning as it lays a foundation of common honesty between man and other man. An example of an ethical issue in accounting would be if management required a subordinate to record a transaction in an incorrect manner to make the balance sheet look more favorable to lenders or stockholders. In the event of such action, ethics would remind us to report the action to upper management and quickly fix the books. As you can see, the accounting equation is an important tool in double entry accounting. It helps ensure that debits and credits are recorded accurately. Beyond this, however, it helps to measure how profitable your business is. The accounting equation is the foundation of your company's balance sheet, which expresses your business assets, liabilities, and owners' or shareholders' equity in detail. If a business is looking for financing, the accounting equation can be an important tool for investors or lenders, as they'll use this to assess the company's financial situation. Does the company have much higher liabilities than assets? This very well could be an indication that they're not managing their money very well.